Welcome, Forex traders, to this video analysis on the 18th of August 2014, where we take a look at the following pairs as always: the euro dollar, the pound dollar, the dollar yen, and the AUD USD. Before we actually take a look at the charts though and technical analysis, we have the disclaimer mentioning here that this material is intended for a global audience. Please take into account that the session may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity for more information. Also, trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors. So please seek the advice of an independent financial advisor for more information on that. Thank you for your attention on both of these disclaimers. So Ned and I are back with the usual webinar schedule after a 1 week break. The webinar schedule is looking as such. 19th of August, we have weekly FX recap and live trading lab Camarilla trading. The 20th of August, we have Forex strategy, and we're showing an indicator strategy in the evening. And the 21st, we're taking a look at Fibonacci and how to select the best moving pairs in Forex. So some good stuff coming up. I hope that you'll join one or all of these webinars for the upcoming week. This is the euro dollar 1 hour chart, and if I look at this screen, I quickly realized that I did not miss much in the week that I was off, and we can see here a big consolidation throughout August, basically. In general, the last 2 weeks of August, the first 2 weeks of August, excuse me, here, just very consolidating and choppy. Now, this consolidation, if we zoom out to a 4 hour chart, of course, is happening within a downtrend momentum. Obviously, we do see this downtrend here and the consolidation happening at the very end. So a continuation of that would be an interesting setup on the euro dollar. If we place a Fibonacci tool from top to bottom, we can see that the currency has respected the 23.6 fib around 134.20, and the next big fib level is the 38.2, close to the 135 psychological round number as well at 134.70. So if price does break out of this consolidation to the upside, I would not be looking to buy that consolidation. There is a small space here, maybe on a very small intraday level. There are some pips to the upside there, but otherwise it looks more bearish when price gets to the resistance level at the trend line and fib for more downside. Now, if price doesn't break to the upside, but rather breaks these support levels, breaks the consolidation to the downside, then I would be looking for the target, which is at about 132.30 here, the minus 272 target, and the minus 618 target at 131, which equals the weekly bottom as well. So we can take a look at that. Here you can see the weekly bottom at 131, and there's a minor level at 133 as well. That's why price is probably stalling right now as we speak. So it looks like price is breaking through this consolidation that we've had to the upside, this correction we've had to the upside. We've broken some major support levels here and here. So if we break that triangle on the 4 hour chart to the downside, 131 is the next target on this main target on this euro dollar. This is the dollar yen 1 hour chart. Here too, a lot of choppiness since August started. Here's the 1st of August, where I will put a red line there, right there. That is the 1st of August. So you can see a couple, maybe 1.5 cent downside, 150 pips downside, but no break of that zone as yet. So we're stuck between 103 and 101.50 for the moment. And those are the main lines here on the dollar yen. If we zoom out to the 4 hour chart, you can see that in July, prior to the August consolidation, we did have a spike up. So how does that match up on the daily chart? We can see here, for instance, that we've been in a consolidation already since the beginning of January, or the end of January to be precise. So a big sideways zone on the dollar yen. This August consolidation is just a small bit of the entire consolidation. So the dollar yen certainly in a very choppy zone. And we really need to break above red and magenta for upside follow through, or below green 180 for some downside momentum, maybe for instance down to parity and 97 here. So those are the lines in the sand on the dollar yen. Pound dollar is probably the exception of all the pairs so far in August. We can see a pretty hefty downside and continuation of the downtrend on the pound dollar. We see prices at the 38.2 fib on the hourly chart, which could be a resistance spot for one more down push, for instance, to 166, maybe even to 165. So that is the only trending pair at this time, or maybe the pound, better said, pound odd, for instance, as well. If we take a look at the 4-hour chart and then the daily chart, you can see that we are nicely trending to the downside here on this pound dollar. You can take a look at this channel, looking at the orange line. Good angle to the downside. We had a recent acceleration right here on last week Wednesday. So this could be a hook back for more downside. I wouldn't expect a higher move up than 167.60 if we break above there, or to be maybe precise, even lower, 167.50. Right, then this is not as bearish as I thought. That would be a good line in the sand if we stay below that level. Also, this trend line obviously is a good level to keep an eye on. The daily chart, we've broken out of the uptrend channel and we're challenging the weekly support at 166.80. AUD USD, very simple. We're still within the resistance and support level at 92 and 94.50. Those are the lines in the sand, with 93.25 acting as a middle moving average kind of attraction point for the consolidation zone. So the Aussie will have to break out of that one of those two lines for me to get interested. There is nothing else to say here except the fact that we are consolidating heavily on the AUD USD. Thank you so much for joining us in this video analysis. Hope to see you in this week's upcoming webinars and wish you all great trading in the meantime. Cheers.